The first rates then on your screens this Friday morning start off in the positive. Both the Nifty as well as the Sensex are chugging along nicely. 20,150 a print for the Nifty 50 in the spot. And I think we should already be around that 20,200 level for the Nifty futures. Metals, once again, I can see are on a tear still. So Tata Steel, Hindalco, both those stocks have made a very smart move. Hindalco is holding up 2% right now. Tata Steel is up nearly about 1% or so. There's ONGC, Bajaj Auto, all those stocks are looking extremely positive as we speak. Let's check in on what Strides Pharma is up to. Remember, it's received the tentative US FDA okay for one of their tablets. So that's one stock which is going to be in focus. There's, of course, CG Power as well, wherein DAM Capital has now initiated a buy with the target price of 500 rupees per share. That stock starts off in the positive, about 2% or so. TCS, Anisha had earlier flagged off this stock. Spark has upgraded it to an add from the earlier reduce. And they've also upped the target price on this one to 37.60 from the current 3200, 35.72 on TCS as we speak right now. While we're at it, let's check in on Wipro. Starts off in the positive. Infosys as well will just come for you on your screens. And LTIM, which has been quite the mover all through this week, that will be up on your screens next. Alchem Labs, some negative news flow there. Income Tax Department is conducting a survey at some of the company's offices and subsidiaries. That stock is down about 1%, not really facing the heat as we speak right now. A bunch of other stocks which we would want to flag off, and let's see the big movers from yesterday, considering it was all about sugar. So Balrampur, Praj, Dwarke Sugar, the entire pack should just come off you on your screens. Triveni Engineering as well. Balrampur is still holding strong, 441 on that stock price as we speak. Balkrishna Industries, Granules, NMDC, these were the big movers yesterday. Sugar, of course, continues to be the strong pocket, but Granules, Balkrishna, NMDC, they are also seeing a continual up move in trade as we speak right now. Aman, any other stocks you're spotting?
Well, it continues to be the broader markets that are looking a little bit more buoyant as compared to the frontliners. So yes, some of those names within that space, and that includes movers in trade today like Bajaj Electricals, Karur Vyasa, Ajanta Pharma, something like a Nalco, even Lemon Tree Hotels, by the way, is up about 2% plus, but the gains are limited to about 1.5% to 4.9% at max. So let's find out what our chartists make of the texture of the market this morning. Bread skewed in favor of the gaining side, 20,100 on the screen. Kunal, your first take and your first trade.
Well, that will be on the Bank Nifty. So again, the opening for the indices are quite, as per the expectations. I think Bank Nifty is something which I'll be, keenly interested in terms of trading, because my sense is that the index should be heading towards a breakout, which is another 250, 300 points at least from current opening of 100 plus points for the Bank Nifty.
Okay, point taken, but do remember it's the record high that the market has hit yet again. The big question, of course, is where do we go from here on? Because the Nifty, the earlier high was 20,110 or 20 thereabouts. So from there, we have opened at record levels for Nifty as well as Sensex. But the question, of course, is where do we go from here on? Naresh?
So the view remains the drift is on the upside, 20,500 and 47,000 eventually is possible. The stock which I would like to go for is Granules India, which has seen a good breakout, could see follow-up over the next few sessions.
Okay, there you have it. Those are what our chartists are betting on this morning. Time to then bring on board our market guests for the day, and we've got Dinshaw Irani of Helios Mutual Fund joining in. Dinshaw, good to have you. It's Friday, and I know you're going to be in a super mood as always, but get us a sense as to what you're making of the exuberance in the markets. Broader markets aside, because I think that's been a different story. Do you believe that there's going to be speed bumps on the way, but by and large, the momentum is looking pretty strong?
Aman, thank you for having me on the show, and very good morning to you and your team and your viewers. So here's the thing, Aman. In fact, I remember coming on your show when it hit 20,000, and I told you that this is just one more milestone that the market's going to achieve on its way up. The fact is that today, even today, the markets are at around 18.5 times forward earnings, despite this huge run-up in the index. But the fact is that if you look at the last 6-7 years, that is post-demon, the valuations are around 19 odd times forward earnings. So that, I think, is more or less giving you a lot of comfort in the fact that the markets are at a very sane place today. And in fact, if anything, the balance sheets have strengthened. They become much more efficient. So obviously, the valuations have to be at a premium to the world and to what history was. Right, so that's one thing out of the way, but that's narrower indices. Right, we're talking about Nifty 50 right now. But if you look at the broader indices, obviously there's been a lot of fraud. Unfortunately, a lot of money flew into mid caps and small cap mutual funds and stocks directly also from the retail space, and that has pulled up the valuations quite a bit in that particular space. But still, keeping the mid cap space aside, because mid cap is actually just 150 odd stocks that you have to choose from, that seems a very frothy place to be in today. But if you look at the small cap space, apart from the index, we go beyond that. There's some 1,700 odd stocks which you can choose from, and it's really an ocean. So if one can work a bit harder and bring out names there, you'll have a lot of options coming out there. So we are quite, I think we're quite well placed. In fact, we're fully invested today. However, seeing that the market has been running up one way for a while, we do expect some bumps, but these bumps are more like time correction or probably 4-5% kind of correction in a very short space as such. And that won't really hamper the overall trend in the market. That's what our feel is. In fact, we tell our clients that if you want to come into the markets today, just stagger it over a period of time, say 4-5 months as such, and then probably play it from there because the overall trend looks pretty good. Yeah.
Right. So, Dinshaw, are you recommending putting fresh money to work within mid and small caps too? Is that what you're saying?
Right. Yeah, Aisha, thank you. Yes, we are actually, because we, as I said, mid cap is out of the way. I mean, for us, mid cap looks a bit frothy. So mid cap, we are quite careful today. But in the small cap space, we have enough choices. And actually, Aisha, the problem arises for a manager because there are 1,700 odd small cap, investable small cap ideas in the market. And he gets cluttered with the 1,700 ideas. And that's where our elimination investing process comes into play, because that actually what the manager has to decide today is not what to buy, but what to avoid, and that is where elimination investing comes in. And actually, the rejection comes with conviction, because you reject from negatives, and negatives are, what is bad, you don't know what is good. Good is always relative. So that's one thing that is there. So that we have, in fact, 8 parameters on which we reject names, and ultimately what is left is what the manager has to choose from at our place, and that really takes away a lot of clutter for him. So he's got this plethora of ideas in front of him which he needs to choose from. So you have to work it that way, and I think that's the best way to play out.
Quite interesting, and your statement comes at a time when we've heard many mutual fund schemes are not taking any fresh money in their small and mid cap schemes. So tell me,
the problem, Aisha, problem with them is that they're looking only at the index. They're not looking beyond the index. That's where we come in. I mean, we have small cap ideas which are at 12-13 time PE. So you can imagine the kind of work that my analysts are doing at our end to dig out these ideas. And they are fairly good ideas, structural growth stories, good management. That's one thing that you have to be very careful about, good industries to be in. So that's where, as I said, elimination investing, that works for us. So.
That's quite interesting. So are there thematic ideas within small caps, or is it more case by case individual companies?
No, we never go by case. We, as I said, that we have these 8 parameters of rejection. As and when any stock gets rejected in that sea of 8 parameters, whatever is left behind is what we look at. And mostly the first rejection parameter is a theme. So you need these tailwinds to carry your ideas forward. It can't be a cyclical small cap. You'll get slaughtered in that space. So you need these long-term tailwinds to come in to take that stock forward as such and clean it along the way. So that's the first parameter on which we reject. So obviously it's going to be thematic, whatever is left behind at the end.
Sure. Dinshaw, hi, this is Anisha also joining in the conversation. So for your own mutual funds, what kind of construct are you looking at in terms of what could be the split between, let's say, smaller caps, the ideas that you talked about, versus large caps, and which are the sectors that you think you'll begin with an overweight stance on?
So Anisha, thank you for asking that question. We are looking at a flexi cap. Actually, that's what we believe our style is. We didn't want to constrain ourselves to a fixed money stuck into various market caps. We could have chosen a multi-cap, but that was 50, 25, 25. So we didn't want that. We wanted to swing between market caps, and that's why we chose a flexi cap to be our first fund as such. And that's where I think our expertise lies, because even today, the PMS and AIF that we're running, it's like a flexi cap fund that we're running. And obviously, as I told you earlier, our major themes going forward, and that's where we're very bullish on, is financials and discretionary consumption, and also affordable luxury kind of consumption that we're looking at. And obviously, we'll have a melange of capex plays playing out, some outsourcing names kicking in as such. So that's how the construct of the portfolio is going to be. A bulk of the money will be in financials and consumption, and obviously all these other sectors also will kick in to that extent.
Sure thing. Dinsha, I wanted to also get in your view on the overall liquidity situation and to a great extent the kind of support that we've been getting from domestic institutional investors. Do you believe that that trend is likely to continue and continue to support the markets?
So in fact, our belief is that it can only grow. I mean, you've seen the STIPs moving from 800 crores or something to today around 15,000, 16,000 odd crores as such. And I think that is the real kicker for the market. That is really where the comfort, even for the FIs, have come in, that there is enough in this market to absorb that liquidity, which if they choose to sell, that liquidity can be easily absorbed by them. And like our feel is, it's not only limited to the 2 billion that is coming in through SIPs, it's also the NFOs, EPFOs, and obviously the unit-linked insurance plays which are into equity. So you're talking about $2.5 to $3 billion of regular flows coming into the market on a monthly basis in equity. And that is really a comforting part. And our feel is that can only move up, given the fact that the number of demat accounts are moving up and stuff like that. And the participants in mutual funds, the unique participants in mutual funds are moving up. So obviously it's given that this particular regular flow has to move.
So Dilshad, let's talk about some of the spaces that you find interesting still and you do find value on the table when it comes to small caps.
Yes. So as I said, that our focus is only financials and consumption and capex to an extent. So unfortunately, there's not many names in the financials, maybe some NBFCs here and there. But in the consumption space, there's enough to play in the small cap space per se. And I think even in the capex or outsourcing space, there are quite a few names in the small cap space that we are looking at. So these are the very narrow category of ideas that we're working on in the small cap space. But as I said, that given that the first rejection parameter is themes, obviously we are left with a very narrow bucket to look at. And I think that bucket gives a lot of comfort to the fund manager that whatever has come through to that sieve is fairly fundamentally strong, management quality is good, corporate governance is good, and obviously valuations are looking good and stuff like that. So that's where we work from.
Within consumption, which are those pockets? Are you playing this through the manufacturing, maybe retail, hospitality? Which are the various wings you're looking at?
So, as you rightly mentioned, apart from probably staples and wherever we see the growth not justifying the kind of valuations, those spaces are totally out for us. Right? So FMCG is basically out for us, and obviously sectors like paints and where the growth is fairly limited, but the valuations are at 60 odd forward earnings, those are definitely out for us, right? So what is left behind is basically, as I said, discretionary is what we're looking at, and there again in say aspirational luxury. So obviously hospitality comes in a big way. Pure textiles move in here. There are shoe companies as such which come in, and obviously these are the few names that I can share with you. I mean, as in few sectors that are playing out for us to a big extent.
It's been very hectic as well when it comes to activity in the primary markets, Dinsha. You know, we've got one IPO after the other that have been hitting the markets. What's your view? Has there been anything interesting or any type of specific company or sector that you guys have had a look at closely?
So, Aman, the problem with the IPO market is if the company is good, it gets highly subscribed, right? So there's no way you can lock in your investor money for a piddly amount of allocation that will come at the end of the day, right? So we would rather avoid on the time of the IPO, unless we're very clear that it's going to give a big pop. We may just lock in some money, but we normally don't do that. Our feel is that it's better to evaluate the stock once it lists. And that's when we look at the stock. And in fact, as I said, that our analyst has to go through the whole process of elimination investing. In fact, there was one particular company which came in with a very big bang IPO per se. I mean, it was a small company, but it was into defense sector and a very niche sector within defense and stuff like that. But it got eliminated at our end at one particular parameter and never made it beyond. So we didn't look at it. And I mean, one saw what happened to that IPO after it listed per se. So that's how we work, and I think that helps a lot in our narrowing down to the particular IPO that we want to look at and we want to play with. So.
Have you looked at the new age platforms? Of course, Samir has been very vocal about his love for Zomato, but other than that, Paytm, even Rate Gains, etc. For that matter, Yatra is coming out with an IPO. You have Policy Bazaar, and of course Nykaa, which has been underperforming. Any other name apart from Zomato?
You took the first two names that are with us, Zomato and Paytm, both are with us as such. See, what do you look at for these new age companies? I mean, most of them are platform companies, right? They provide you a platform on which you are supposed to take a convenience given to you on a platform, right? So basically, what do you look for? Does it provide convenience? Yes. But does it provide a mass convenience? Yes. Is it encashable? Yes. Is it replicable? If that answer is yes, then it's a total no for us. So the first two names, which is Zomato and Paytm, which you took, are the ones which are there on a portfolio mainly because of this. Right? It's easily encashable convenience, and there's enough and more and it's a mass convenience that is being offered by these two platforms. They're not easily replicable. I mean, we've seen globally these models playing out, and globally there's limited competition in this space as such. So obviously, these are the two that we're comfortable with. The others, I think the problem is they're easily replicable as such, though they may provide convenience which can be encashed, but easily replicable, and that's why we're not interested in those. And we haven't seen globally also those models playing out.
Right. Okay, Dinshaw, great to have you on the studios as always. Thanks as always for taking the time out and chatting with us. That's the view coming in from Dinshaw Irani from Helios Mutual Fund. Let's also hear out some opinion that we've gathered through this historic week. Remember, we started off with that 20K all-time high mark. Here's what some of the most renowned experts on the street are making of the markets now.
Indian market, has a tremendous journey in the last few years, and it's shining very well in the global arena as an economy, as a market capitalization, and by all standards. It's something great news for India to celebrate.
All the good news are there in price. That does not mean that market is going to fall today or tomorrow. This may continue for 1 month or maybe for 2 months. But of course, it is not going to last forever. 100% it is euphoria. It is you can say that FOMO or whatever the terms we use in this market. So people are still fascinated about now penny stock and cheap stock and chota price ka stock. SME also, I think psychologically people treat that SME like a penny stock. I think so. SME is not a penny platform. Let me clarify this thing.
The country is firmly, on track to continue its growth rate. Being one of the fastest growing economies in the world, and for a change, I think this milestone does not sort of scare you. I think this is a milestone which is backed by fundamentals, which is backed by optimism that this growth rate is going to continue, and therefore I think it gives confidence that this is just one of the milestones. There are many more which we need to conquer as we move ahead. I think one has to be definitely optimistic because there is still a lot of room ahead for the economy in the markets, but extremely cautious of not getting sucked into this FOMO kind of a situation.
Once again, euphoria which has made a comeback. So I think what I feel is that the mid caps and small caps could take a bit of a breather, and you're seeing that on the screen today with the downtake. And this could continue for some more time because there is clearly room for some downside. But I think the focus is really going to move to the large caps from here. So the large caps can make up for the underperformance of the last couple couple of months is what the view is for the next few weeks. And we do see the Nifty gradually moving towards a level of 20,400. I know it's not big in percentage terms, but unfortunately, I don't have large targets to work with, because I do believe that the Nifty is going to be in that band of 19,500 to 20,400.
To me, I think these small falls will be bought into, and hence I don't see major correction unless there are some big negative events which turns out. Importantly, one will have to recognize that the stocks have seen vertical movement upwards, and the earnings growth is not going to be vertical movement upward. Despite these order books and strong momentum, you will have quarterly volatility for these companies, which has always been the case in the past, and hence how one deals with that through the next 3-4 years is going to be the important thing.
We had a phenomenal rally in the last 6 months, so probably a correction was much warranted, or probably better late than never. And I think it's a healthy correction for the market, because there are pockets of markets where we've seen stock prices have clearly run ahead of fundamentals, and there's been a fair degree of exuberance or froth, if I may say so, in mid-cap, small-cap space. So I think a correction is much warranted. Aggregate markets are still reasonably priced. Index, if you look at the Nifty index, trading at about 20 times current earnings, is reasonable in the context of the kind of earnings growth, strong earnings growth that we are witnessing. So I think from here on, much of the gains on the indexes are done, and markets will be more stock specific in that sense.
Welcome back. Well, the market is holding up all right, and one stock which is firing away, the top gainer at the index, is Bajaj Auto. And of course, there's a Bank of America note that has come in. They have upgraded the stock to a buy from a neutral earlier. The target price has been hiked to 5,550 rupees. Earlier, that number was close to around 5,100. So there's an uptick of the target price coming in by almost 400 to 500 rupees. All business segments are now well positioned for positive growth in FY25 itself. Even if you look at the revenue CAGR, they're expecting a 14 to 15% revenue CAGR over FY23 to 26. And the business model is quite well positioned. Both structurally and cyclical drivers are at play. Exports is something that has been plaguing the stock, because that is the reason why it was underperforming. The export volumes were very, very bleak because of all the issues that were happening in the African region. Exports, they believe now finally have bottomed, and they are at an inflection point. So the weak link that was there for Bajaj Auto also seems to be firing up in terms of exports. 14 to 15% revenue CAGR, an upgrade coming in. No wonder then that stock is high by almost 4%. And of course, they've also managed to launch one of their cargo trucks yesterday. So the three-wheeler cargo, which was long anticipated, has finally also made its debut. So that's the other trigger for that stock. But what's the trigger for NIIT? Because that stock has soared 57% in the last 5 days itself. Let's try and decode that with Mr. Vijay Thadani, the Vice Chairman and MD at NIIT. Vijay, hi, thanks so much for making time and speaking with us. That's exactly the first question. What explains the 57% rise in the stock price over 1 week? Any fire to the smoke?
I think you should find out from the marketplace, because I'm sure we did not participate in that activity. I think we are conducting our business, so I have nothing to say as far as that is concerned. I think what I can talk about is the business and the business outlook, and that also I'll talk to you on the medium to long term basis, given the fact that we are in a silent period.
But let's talk about business then. The Q1 volumes were impacted on account of the temporary freeze in hiring that we have seen in IT sector. And for the rest of the year, the prospect also doesn't look very strong, because the companies are talking about how headcount growth is going to be muted. What's been your reading on ground of the IT hiring?
Yeah, so first of all, our business goes beyond IT. And therefore, we also are strong participants in the BFSI, especially the banking and financial services, and now increasingly in the insurance segment also. So the IT sector, as you know, we service two clients of people: the early careers as well as the working professionals. The early careers hiring freeze and delayed hiring is on record and is available to everybody. I think there is a bit of loosening up which is beginning to happen there. Maybe not as much with large global systems integrators, but more with the tier 2 system integrators, as well as the global capability and competency centers. So there is a small movement that we are noticing in this quarter. We do believe this momentum will pick up. However, the larger thing which will influence growth in the coming quarters would also be the reskilling and upskilling of existing workforce. As you know, in technology, 5.5 million people are there, with technology coming to us at a faster rate than ever before. People have to upskill themselves as well as reskill themselves depending on what they are doing. I think that is a momentum that we are beginning to take advantage of. And the whole generative AI, I think, is generating a lot of interest in corporates to see how they can improve their competitive position. The third thing is there are some sectors which are looking up, like manufacturing, design, engineering, R&D, and this is based on all that is happening as far as the growth of manufacturing in the country and government policies in that direction. So this is the technology. On the banking, financial services, and insurance, I think there is a large momentum building up because there is an increased hiring as well as increased skilling of the workforce, which we are noticing. And I think we are getting an advantage of that as well. We did have 2 very bad quarters. And I think in quarter 1, despite very low hiring taking place in the quarter, we did manage to grow quarter on quarter, though by a small percentage. I think we have a larger possibility in the coming 3 quarters. And I think in this year, we stand firm on the guidance that we had given earlier. Of course, many things can change as we go along, but given wherever we are, I think at this point of time, we feel good about the guidance that we had given. So this summarizes for you.
Yes, it does, and very, very clearly, actually, Mr. Tarani. Thanks, for being so candid with that. So, since you are, seeing an uptick both in banks as well as IT, could you give us some color, say, a split of incremental business, banks versus IT? What's doing better?
Okay, I would have said that in last quarter there was a trend which we were noticing that the banking financial services will do slightly better. And I think that is what we are noticing as we go along, because at this point of time, banks have to spread themselves out all over the country, and therefore they need a large workforce. We have many more requirements, and we have increased the number of customers and banks that we are dealing with. I think we are now beginning to deal with the most of the large private sector banks. And the larger the better for us, because it gives us an opportunity to play a bigger role. And to that extent, I think this quarter, next 2 quarters, perhaps we would see a larger push in that direction. Technology, as I said, global capability centers, as well as the tier, the second 5 or the next 10 technology global systems integrators are beginning to show some momentum in terms of upskilling, reskilling, as well as also a little bit of fresher hiring.
Capability centers, etc. But I'm sure, Mr. Tarani, you're also looking to clearly leverage all of this new age technology. So what about the increased trainings and courses around AI, digital, etc.? And, what is the outlook as well in terms of how realizations and pricing is panning out? How exactly is that trending?
Okay, so that's a very good question. I think AI has a very huge role to play in determining the competitiveness of every business. Every business, despite the fact whether you are technology or BFSI or whatever sector you are. So we are getting large requirements from people who want to understand how AI can help them. Given our large global exposure where we work with multinational companies across the world, I think that experience is coming in very useful. And we are therefore able to give them use cases as well as methods which people have used to induct. So for example, one tendency or one trend that we are seeing is that of citizen developers. citizen developers are saying we will not wait for our IT workforce to help us out, but as users, as business managers, we would like to start using AI or start building small things and small experiments with AI. So stuff like these trends are actually very, very positive for us. And the good news is, since it's a novelty value, there are less number of people who are able to offer this kind of a thing. I think we are able to get deliver higher value to our customers and therefore get better fee structure as well. So AI is definitely that, but AI has a larger role to play in determining how we conduct our education itself. So you would see NIIT now offering AI in just about everything that we do, and AI will start playing a role in the way we deliver education, as well as we include it in the content of the program, as well as helping the corporates implement their applications. So I think AI does have a very important role to play.
Thadani, just wanted to get that clarity. You said you stand firm on your guidance. Was that guidance the 8 to 10% growth for the year with a mid-teen kind of, mid-single-digit kind of margin?
No, I think we had guided that we are looking at a single-digit growth, 5 to 6%. In the beginning of the year, we could have been much more stronger, but given the first quarter and the way it went, we had guided for a 5 to 6% growth and a break-even and a small single-digit margin. And that's what we are firm on.
Break-even and small single-digit margin. Any more acquisition lined up? Because RPS is something you've been able to digest well. What about anything else in the pipeline?
We are always in discussion and looking for opportunities, and would share with you at the first available opportunity that we can.
All right. We look forward to that. Good to have you on board. Thanks much for taking time out and joining in. Just a quick glance at the equity markets and currently holding out. So it's about 20,149. It's clearly still the broader markets which are actively outperforming. Bajaj Auto, Hero Motor, Eicher, M&M, Tata Motors. So clearly you can say autos are in the fast lane. All right, let's move on. Let's map out the coal demand trends and find out a little bit more about whether or not India is ready to meet the power demand. Prasanna K. Muttupalli, who is the CMD at NLC India, joins in to discuss this and lots more. Thank you so much for taking time out. Let's begin by talking about the coal production update. What has that been so far in terms of the production, and what is the annual target that you've set out?
Madam, as on date, the requirement of coal is growing day by day. As the power demand is increasing, the requirement of coal is also increasing. On the September 1st, India has the power demand of 239 gigawatts. Accordingly, to match with that, I think all the coal companies are working hard for maintaining the production levels of coal. NLC India Limited, we are having at present one coal mine operating, where we achieved 10 million target last financial year. And this year we are targeting for 14.4 million metric ton, and already we are producing in line with that. So going forward, the demand for coal is going to increase, and accordingly we are planning to start production of our coal production at Pachwara coal block, the Jharkhand. And also recently NLC has won one coal block in North Dadu under commercial auction, and we are moving ahead and faster pace to make the mine operational at the earliest.
We've also been reading reports that, coal inventory is low. Is that the reason that the increased demand is what one is witnessing, or is there some supply chain disruption? And if so, how long do you expect that to last?
There is no issue with the productions, madam. There are some logistic constraints are there. Those logistic constraints are being overcome by a close coordination between the Ministry of Coal, the Ministry of Railways, and the power utilities. So as on date, there is no constraint in coal production due to rains. There is a slight decrease in the production rate. Otherwise, there is no issue with the production, and I think the target of 1 billion ton production will be achieved at the earliest.
Any sort from the government to up the production as well for coal, and are you looking then to add more mines?
Yes, madam. We are planning to add both lignite as well as coal capacity. And lignite also we are going to start new mine for feeding to our 2 into 660 megawatt first lignite based supercritical thermal power station at Neyveli. Also, as I already told, Pachwara coal block is in we are in the advanced stage of starting the production. We are targeting for starting the production from January onwards. And in addition to that, the North Dadu West coal block, we won recently in the commercial coal block. We already received order from the government of India. And we are taking the steps on faster pace to ensure that within the timeline prescribed, well ahead of the timeline prescribed by the government, the coal production will start.
About the production targets that you're looking to increase as far as coal is concerned. I wanted a quick word on your expectation of coal prices are likely to move, and then shift focus to your, the power generating business as well, because you are making strides into renewables. What's the update and what's the expansion plan there?
Madam, the coal prices are going to be stable. As you know, the power generation by coal as a fuel, that going to continue even till 2047 as per the projections that is given. So coal prices are going to be stable and somewhat on the increasing trend because of the demand requirement. That is the first point. Second, as you rightly said, NLC is balancing both conventional power and renewable power while adding the capacity in the thermal sector like our Ghatampur thermal power station of 3 into 660 megawatt is going to come in the current financial year. And also we are going for Talavera thermal 3 into 800 megawatt. Already bids are in process. So we are hopeful that by December we will be awarding that. And in addition to that, we are aggressively adding the renewable capacity. Already around 2000 megawatt capacity is under construction, and already we are having around 1450 megawatt, and NLP was the first CPSU that crossed 1 gigawatt renewable capacity. We want to continue that, and recently we won 600 megawatt renewable capacity at Gujarat and 810 megawatt renewable capacity at Rajasthan. And we are aggressively trying to add more capacity to be for becoming a 6 gigawatt company by 2030.
Had a follow-up on the Talabira plant that you were talking about in Odisha. Reports were suggesting that there's a delay in that because of some of the land acquisition issues, etc. as well. Could you give me an update on that? Are all of those resolved? Because you talked about the bids being in the pipeline now.
Yes, correct, Mani. You are correct. There were some problems with the land, but with seamless support from the state government and the Ministry of Coal, we are moving ahead and we are hopeful that by October or November, we will be able to get substantial portion of the land. There is seamless support from the district administration as well as state government and Ministry of Coal. So with that, we are hopeful that by November, we will be completing the possession of majority of land, and we will be awarding the contract and moving ahead.
When you get possession and then you'll award, but when will the commercialization start? Because of this delay, that might have got pushed a bit as well.
We will be awarding this contract by December, madam, and then after that it will be 3.5 years time it will take. So we are hopeful that by 2027 the commercial operation of these units will be done.
All right, and what about your overall financials as well? The net profit declined in Q1 on a year-on-year basis, and there was a decline in your revenue from operations as well. Was that, what was the reason for that? And do you think that we'll see a pickup, or Q2 is going to be seasonally weak and therefore the sluggishness could continue?
Madam, in Q1, Q2, there were some issues with land because of which the lignite production slightly dropped, that resulting in drop in the generation levels also. But now all the issues have been sorted out, and we are hopeful that in the balance part of the financial year, we will be able to increase our lignite production, coal production, as well as the generation to reach the target set by Government of India.
Good to have you on board. Thanks so much for taking time out and joining in. So that's the view from NLC India. Coal demand will rise further. They're looking at a 1 billion ton coal production soon, and they are on track for their capacity of 6 gigawatts by 2030. That's a stock at 135. Tell you what, we'll slip into a very quick break. Lots of stocks in news, lots of big corporate voices as well lined up when we return.
Babe, I love this apartment. Island kitchen.
लॉक करें?
और जब ये नया फ्लाईओवर बन जाएगा ना, मॉम एंड डैड विल बी जस्ट 20 minutes away.
तो परफेक्ट नहीं है घर. इसीलिए housing.com with maximum properties. housing.com पर से perfect.
Okay, taking stock of which are the stocks which are buzzing around. Well, on the gaining side, it continues to be Restaurant Brands Asia. That stock is higher by almost 14%. UCO Bank is doing quite well in the trading session, as is the rest of the public sector entities as well. Oil India is higher by around 5.5%. We had a chat with the management at Oil India as well, and they were targeting good growth for themselves. So maybe that commentary is something that is supporting the prices. Kalyan Jewellers has, of course, resumed the uptrend. Bajaj Auto, as we talked about, that Bank of America upgrade coming in, and then Praj Industries that Nikunj was talking about at the start of the trading session is also inching higher. But what's happening with the entire diagnostic space as well as online pharmacies? Because channel checks are suggesting that the price war seems to be ending because the online pharmacies seem to have increased the prices as well, and that should augur good news for the sector. Let's go across to Amakshi to get more details.
Well, yes, a whole host of diagnostic as well as pharmacy stocks are in focus today, and that is because Tata 1mg has raised its test prices by around 12 to 37%, while Apollo 24/7 has raised the test prices by almost 60% in the month of August, and this is as compared to the prices that were seen in the month of June. The price hikes were mainly seen in semi as well as high specialized tests. In fact, the first price hike, the first aggressive price hike had come in during May to June of this year itself, and that was particularly from Farm Easy. Online players are also seen gradually raising prices for selective preventive packages as well. For instance, Tata 1mg's Platinum Full Body Checkup and Farm Easy's Basic Health Checkup have seen a price increase of almost 7% to 18% respectively, and this has happened between December of last year to August of this year. There are some smaller players as well, such as Netmeds and Healthians. However, they seem to be reversing the course. Netmeds has kept its test prices at a discount of almost 60 to 70% as compared with incumbents in Mumbai and Delhi. Healthians has also kept test prices at a discount of almost 50 to 70% to Metropolis's prices in Chennai. So all in all, what Nuvama has highlighted is that the pharmacy price wars are seen vanishing, but overall MedPlus discounts are looking quite attractive. So given those price increases, watch out for a whole host of diagnostic as well as pharmacy stocks, which includes the likes of Metropolis, Thyrocare, Dr. Lal Path Labs, Vijaya Diagnostic, Krishna Diagnostic, as well as MedPlus.
Thanks for Makshi for those details. We'll take a very short break. Be right back with lots more. Back with First Trades and on to an exclusive conversation with the OIL India Chairman Ranjit Rath. He shares the outlook on business as well as the company's capex plans. Listen in.
Exploration, development and production would encompass about 7,500 crore investment on a standalone basis from Oil India Limited for the current year.
On windfall gain taxes, since crude prices are, crude prices are increasing. It's beyond $90 per barrel, and we are expecting that the government may increase windfall gain taxes on crude production going forward. Do you think it is impacting on your overall revenues?
As far as crude oil production is concerned, our focus is to enhance production, and that would add to the revenue kitty. The price hike in terms of international benchmarking and the consequential taxes or levies are a given. So our focus would always remain on physical performance.
I'll ask you a last question on your Russian investment, your investment in Russia. What's the status? Is it a concern for you? What's the status as of now?
Russian investment categorically is not a concern. These are two producing fields, dividend paying. I must share with you, we have already got about 80% of the initial capex that was invested as part of our dividend. Initially, the repatriation was pretty smooth. We were getting the dividend back to our subsidiary level at Singapore. Now, because of the unfortunate incident, sanctions have come in. So about 150 million US dollar from Oil India point of view is actually lying in one of the State Bank of India branch in Moscow. So it is as safe as that. It is a matter of time that we will able to negotiate and get the money getting repatriated. Multiple channels of discussion processes are being evaluated, including the legal options, alternatives, G2G engagements. So it is absolutely not a concern.
Okay, let's move on and let's talk about all the buzzing stocks in trade and let's take it across to Kunal as well as Naresh and find out what's actually holding up on the charts. Kunal, what's the chart buster that you're identifying?
So it's a differentiated chart this time around for Bank Nifty, and what I'm discussing is not just the price trends, but price with respect to the open interest. So in the morning we were discussing this point that the Bank Nifty open interest has taken a sharp knock, and what's been the resultant effect on the Nifty. So the bars which you can see, the column charts, is the open interest, and from the start of the September series, this was the first day, or the rather the end of the August series, 31st August. That was the point where the open interest was almost 23.7 lakh shares for the banking index. And from there, we've seen a gradual reduction. Now the open interest stands at closer to 16.5 lakhs or 16.1 lakh for the Bank Nifty, which means that there's been a sharp reduction of the Bank Nifty open interest in the last 10 odd days. What's been the resultant effect in the prices? The Bank Nifty, which was almost at 44,000 at the start of the September series, is now at or above that 46,000 mark, which means that majority of the trend on the upside has been led by the major short covering. So this is a very classical data. This is completely different than what we had seen in the month of July, where the open interest was more flattish and the Bank Nifty was rising. So that was on the back of some trading positions as well as long positions. But this time around, it's completely short unwinding, which has led into this strong rally for the banking index.
All right, let's move on and find out what Naresh has picked out. Naresh, what is it that you're analyzing for the day?
So that's a chart for Satin Credit Care. The stock had a deep correction in March 20, went from 230 levels all the way to almost 2 digits, and then made a slow and steady recovery over the last 3 years, and finally has come back to the levels of pre-COVID. Consolidated here for the last almost 2 months, and now has given a flag breakout followed by a breakout above the pre-COVID highs of 230. A clean breakout here, strong volumes, a buy at current levels, add-on dips with a target price of 300, 350 in the short to medium term, stop loss at 220.
Let's discuss individual stock ideas as well. Kunal?
So I'll go with two buy calls. First is a buy on Zomato. That stock is trading about the 100 level, so I'm expecting a strong breakout, 120. So almost a 20% upside for Zomato is what I'm expecting with the very near term. Stop loss for this trade, 93. And the second is a buy on Ashok Leyland. That stock has sprung up back into a breakout mode above 180 mark. Targets of 190, stop loss 178.
Right. Naresh, what about your stock strategies?
First is a buy on ONGC, breakout done here, follow-up price action as well. Stop loss at 184, target price of 200. Second is a buy on Biocon, which has given a breakout above the 275, 278 mark. Stop loss at 270, target price of 300.
Discuss what's happening with the broader end of the markets. Here's none other than Vineet Samre from DSP Mutual Fund, who actually believes that the small cap in, or rather fall in the market will be bought into, and he doesn't actually see a big correction in the markets going ahead from here, especially when it comes to the small caps.
I think the way current sentiments are around the mid cap, small cap stocks, the kind of flows which we are seeing in these categories, I would say that these small corrections will be really bought into, and people may not really give up till the time there are let's say bigger triggers. I mean, there are actually no any big negative signs or any big negative triggers which can spiral into a problem as of now. But I'm saying that the world is in a very disorderly state today. I mean, we at one end we keep talking about high interest rate, recession fears, and all of that, and at the other end of the spectrum, there is so much money in India which is actually flowing into the small and mid caps for right, wrong reasons that time will tell. I think fundamentally, as the companies which keeps showing strong growth over the long period of time, they will eventually emerge out as winners, and there will be definitely in this rally there will be spaces which will be low quality, will be run purely on themes, not back.
Always a pleasure to have you, Nitina. Thank you for joining us.
Thank you very much, Nikunj. Pleasure for me also.
Should we pick it up from where we left last time? That SBI was getting ready for a new dance number, Tango Salsa?
No, this is our effort and endeavor, the way the economy is prospering. We want to be very much part of this growing economy, prospering economy, and we want to ensure that there should not be any lever which we should not use to support the growth of this economy.
Mr. Kara, you've been calling the credit cycle right. You've been saying that, look, the double-digit growth is real, the double-digit growth is here to stay. When we spoke to you last time, there was a inflationary concern, there was volatility in the bond market, and the base effect had kicked in. But that is a conversation we had a quarter ago. How are things shaping up for this quarter?
I think as far as this quarter is concerned, inflation, of course, we have seen that for 2 months there was an inflation which was outside the tolerance level of Reserve Bank of India. But I would say that it was not a trend, it was more of a one-off, essentially attributed to the vegetable prices, etc. And I expect that the rains, if at all we look at it, 36 states and union territories, out of that, about 25 states and union territories have received the normal rainfall. So this is eventually going to get reflected in the inflationary trend, and my expectation is that it should come back to within the RBI's tolerance limits, and that is something which should go well in terms of the interest rate trajectory. So my sense is that interest rate, we should have more or less, it should be at a pause situation as far as the RBI policies are concerned. So that is, to that extent, it's a very encouraging sign from the economic activity point of view. And we have seen that, as far as the banking system is concerned, the growth in the credit from the banking system, there is somewhere in the range of about 12 to 14%. And last year we had seen the situation where the deposit growth was trailing far behind. But this year we are seeing that the deposit growth have also picked up. Well, of course, the cost of deposit has also gone up, and the CASA for the system has also come down. These are the situations normally seen in the inflationary conditions. Normally people have got a tendency to shift their deposits from savings into the term deposits. But I think overall, if at all, the interest rate situation remains stable, it will certainly help the investors and also the corporates to really plan out their investments. We have seen that as on March of 23, the capacity utilization has moved up to 76%. So we have already started seeing the traction in terms of the corporates taking decision for fresh investments. Some of the sectors have actually hit the full capacity situation too. Considering the fact that the economy has infrastructure as one of the core sector where the growth is happening, then batteries, EVs, renewables, these are the sectors which are actually new levers of growth. We had not seen these sectors in the past. So I think the conventional sectors plus the new sectors for growth actually paints an excellent picture for the growth of this economy. And that is something which gives us a confidence that though this year we are expected to have a growth of about 6.8, But going forward, in the foreseeable future, we should be growing more than 7%. That's what my assessment is based upon what I read from the various factors which influences the economy.
So, Mr. Khara, on a sub 7% base of GDP, you're talking about a 12 to 14% credit growth. If you are of the view that next year it will be 7 plus, which means can I safely assume that the credit growth trajectory for SBI is only going to be improving?
I expect that to happen because for the as of now our credit deposit ratio even at a global level is also somewhere around 72%. If we look at only the domestic, we are at 65%. We have enough buffer available with us to support the growth requirement of the economy, and we are only ensuring that we pick up the assets which meets our risk appetite, and that is something which our major focus is. So I think we have the required ability to support this kind of a growth, and my normal expectation is that we should be growing somewhere in the range of 12 to 14%.
So 12 to 14% you guided for. I'm again being very careful with words here. When your assumption for GDP growth is sub 7. Next year assumption, according to Mr. Khara, is going to be sub 7 plus. So 12 to 14 should become 14 to 16 then. I'm trying to get maybe a headline from you.
To say that maybe if at all it is 6.8, it would be around 12. But if it is at 7% plus, it would be at 14. Okay. So the range remains the same.
And SBI has historically beaten the market. So then if I add that as a factor, then 14 should also be beaten.
Let us wait and watch.
We've seen a war of liabilities. Something where you always said, look, the smaller banks are suffering, but for SBI, because of the SLR and the other tools we have, the impact would be minimum. Now that the war in liability, according to you, is settling down, what happens to SBI?
Well, as far as the liabilities are concerned, apart from the war, we also look at it from the point of view that liability is more of a franchise. So we have got large customer base, and we must ensure that their interest is protected. So with that in mind, we have been tweaking the interest rates here and there in some of the buckets, more so in the fixed deposit, and to ensure that we should be in a position to cater to such investor depositors base through offering a inflation adjusted returns also. So I think having said that, we are having a very clear focus in terms of improving our CASA 1 and improving the CA component of the CASA. Traditionally we used to depend upon the government deposits, but of late you would have observed that the government is also moving towards the just-in-time funding of the accounts, and that is one of the reasons why we have started actually for about 6 months plus now. We had recalibrated our strategy, and we started looking at the trade commerce industry and the transaction solutions in a very big way, and we have already started seeing the positive results of that, and that gives us a hope that maybe the CA component of the CASA will improve.
One big point, Mr. Khara, for SBI has been the agri loans, still in double digit. This year, monsoon, good and bad, we can argue depending on the time structure you're looking at. But there is stress in the agrarian economy. Rural economy is not picking up. So your plan to bring the agrarian loans to double digit, from double digit to single digit, what happens there?
Yeah, our plan for bringing the NPA level in the agricultural loan to single digit, it still stays. And actually, we used to have NPAs as high as almost about 13% in agricultural loans, which have been already brought down to sub 10. So that is something which is nothing but our efforts on the ground to ensure that we stay connected with the borrowers, and it helps us in ensuring timely review, renewal, and collections also. We had come out with a operational support subsidiary about 6 months back, and that is actually proving to be very useful in this direction. So I would say that yes, there is. I would also mention that the stress which you are mentioning, it may not be a reality on ground, because how it will really pan out, we'll have to probably wait and watch for another month or so to really figure out how the rural economy will look like. But the way things stands today, I'm a bit hopeful that we should be in a position to bring down our NPAs in the rural sector or maybe agricultural sector from the current levels of about 9.5, 10 to somewhere around 7%. That is our internal target. And hopefully, the way we are operating, we feel confident that we should be in a position to achieve this. Apart from that, we are also trying to change the complexion of our rural book. We were having low value KCC loans, which are actually comprising about 40% of our book. We are now looking at the agriculture investment credit. We have got encouraged by the Agriculture Infrastructure Fund, which was 1 trillion of fund announced by the Government of India. And we are looking at such opportunities to support the rural economy. We have already created 47 centralized processing centers to deal with high value agricultural investment credit. So I'm quite confident that we will have good opportunities of underwriting good credit risk in the rural economy too. And that eventually will show up in our overall quality of the rural book.
But looking at the big picture, you've said that this is a multi-year credit cycle. We are 2 years already into a strong expansionary cycle. Can I say, as of now, if one has to take a view, you see this credit cycle for SBI and for the banking sector per se, because whatever you ultimately will say, sir, is a representation of the sector. Do you think there is visibility for at least 3 to 4 years of double-digit growth?
See, I tell you, when it comes to the retail I feel has got a good potential to grow. And why I'm saying that is because when it comes to the services sector, that has done very well. And I get to have a visibility of an excellent service sector going forward also. The reason behind is, if you will look around, you will see that there is a new levers which have come in. The data center, the AI base, analytics, and all this is supporting the global economies. So I think these are the newer sectors which will create quality employment in the IT sector. And with that quality employment, the aspirations on the part of the individuals will go up, and we have seen that it actually fuels the demand. With the demand getting fueled, the demand for the white goods getting fueled, all other sectors are connected to that. So that gives me the confidence that yes, we will be in a position to see these kind of things happening. The other very important area is, thanks to the infrastructure development, road sector, logistics are becoming very, very important sector for the economy. And there's a conscious effort to reduce the cost of logistics from about 12% to about 6 to 7%. So which also means that warehouses, data centers, apart from what I mentioned in terms of the renewable economy, the solar panels, solar cells, now the demand for hydrogen, development for hydrogen. So these are the newer sectors of the growth and development, and that is something which gives the confidence that as compared to past, where we have been in a position to see the cycles of growth in 5 years term, these new sectors give me the hope that maybe this is going to be much longer term as far as the growth cycles are concerned for Indian economy. And the kind of focus which the Government of India and the state governments have in terms of development is quite remarkable.
How much of your current corporate book is coming from new businesses which 3 years ago perhaps were zero or minuscule?
These are the early days. But yes, of course, we have started seeing, for instance, the data centers. We have started seeing the proposals coming in. So it's a very recent development, but we are funded also.
On your book, these 3-4 businesses which you mentioned, when will they start moving the needle for you?
I think maybe another year or so. We have already started. We have supported the renewable sector in terms of the solar panels, and also we are supporting the rooftop solar. And all such initiatives we are supporting, and we are seeing good traction of demand across the economy. Maybe SMEs are also putting up rooftop solar. We are actually supporting solar pumps in the farm sector. So I think the way we consume energy, the sources of the energy are going to change in a dramatic way in the days to come.
I'm again going back to the big picture, sir, you've sketched for us. Your big picture assumes capacity utilization uptick, an uptick which will come from retail growth. But when new sectors, they will kick in, and now they will move the needle for you in FY25. Then for next 2 or 3 years, we are looking at rather explosive numbers from SBI. You may want to play it down, but you're putting the pieces together for me to interfere.
No, actually, what I mentioned about retail, and then I mentioned about the various new levers of growth in economy. In that context, the others which will actually start showing up would be the SME, the ecosystem, because they will also grow. So we are internally, as I mentioned, that we are very mindful in terms of the quality. It is not merely the number, but the quality of the number which matters for us.
Fantastic. So no NPA problems.
We want to avoid any such NPA problem, and that is the reason why we have strengthened our underwriting practices quite a lot.
Okay. Let's look at the recent move from Reserve Bank of India in terms of systematic withdrawal for the ICRR. Liquidity comes back into the system for SBI, could be 20 to 25,000 crore. What happens when the money comes back?
Also, this is a point of time when the busy season will also kick in. So that is a point of time when the credit growth is normally higher than the usual. And we expect that the RBI decision could have been one of the factors which would have influenced the decision, would be the busy season requirements also. So I think we should be in position to deploy that effectively.
Mr. Kara, the bank as an idea is not moving anywhere. No recoveries are happening there.
No, actually, this is an initiative which normally takes some little more time. Outcome, as far as visibility of outcome, it might take some time, but it's a bit of a process which it really goes through. So I think in terms of processes after the...
That's the SBI chairman speaking exclusively to ET now, talking about how they're going to see an improvement in credit growth trajectory. 12 to 14% is what they're aiming for. They're hopeful to bring down NPAs as well in the rural sector, and talking about how they are seeing proposals from corporates as well in new areas. 597, that's where the stock price is at. We'll slip into a short break. Be right back.